Hey guys, and welcome to the Working Money channel. I don't know how many of you guys are feeling this. Let's be real for a second. This is coming from Nick, Crypto Crusader. Crypto right now absolutely sucks. This is why currently crypto is a ghost town. The retail crowd only likes the market when it's pumping. Right now, this space is basically dead. This is the reverse psychology that I think many people fail to realize. If you can get in now when prices are low, again, this is, there's a reason they call this the reaccumulation range. It's reaccumulation for people that know what they're doing. Otherwise, the retail traders are just complaining that the prices aren't going up, up, up. And this is why I offer the Patreon, patreon.com/workingmoney channel for those of you guys interested in following what I'm trading, the moves I'm making, the types of cryptocurrencies I'm buying, and the prices I'm getting in at, guys. I've done videos every time I've purchased a cryptocurrency, other than the initial batch. I am recording myself clicking that buy button, showing you guys exactly at what prices I'm getting into these cryptocurrencies, giving you guys my cost average. And these cryptos don't necessarily have real world utility, but I foresee, hopefully all of them doing very, very well this bull run. I've diversified this time around. I'm not making the same mistakes twice. So for more information on that, you can follow me, patreon.com/workingmoney channel. And now is the time to do it. A lot of those cryptocurrencies are at good price points because the space feels dead, because prices have regressed a little bit. We will probably chop a little bit more, but the real fun has yet to begin. Bitcoin dominance is still over 50%, while altcoins continue to just bleed, chop, or range. You will witness life coming back to this space in an instant once we break over the March highs and everything is green again. The only goal you should have right now is selling into the euphoria phase. Oh yes, oh yes. Once it hits the market, harvesting season is almost there. The warning signs are already there, hinting at it. Now it is time to simply be patient. So guys, don't get distracted by all this noise. Matt CR here saying, Nick, appreciate everything you do, but I'm going to have to go ahead and disagree with you on this one. I don't see this environment as sucking. For those that have been disciplined and systematic with their buys and sells and maintain a wider perspective, these are good times. And Nick says, yes, for those that have been around, this is the best time in the market, but just generally, this market sucks. In terms of sentiment, it sucks. It's not so much about prices or accumulation opportunity or any of that. It's pretty much just a sideways market and has been for a while. But, when we take a look at other factors in the market, when we take a look at how Bitcoin has reacted in the past, we know that this is just the beginning. We haven't seen those really deep retracements that we've seen in the market in previous years yet. So we know the market is building. The other thing is we're seeing crypto sentiment really gaining steam, crypto building in the space really gaining steam too. The Wrath of Kahneman here bringing this to our attention. Note, Zonix is also one of the 11 startups selected by PwC's accelerator program, and PwC, PricewaterhouseCoopers, they're a big deal, okay? This was retweeted out, originally posted on the XRP Commons YouTube page, and this didn't get a lot of views, but here's the CEO of Zonix explaining how they are building on the XRP ledger and explaining tokenization, what they're doing, and how that is going to affect trading, issuance, and liquidity in the market. Listen to this.
Any issuer who wants to tokenize the asset, whether it's commercial real estate, debt, or an equity, and in 48 hours, they can be up and running to tokenize any asset class. Zonix, take one. Mark. My name is Sanjeev Birari. I'm one of the founder and chief business officer of Zonix. We started in 2017, and up till today, we have done almost close to around $5 billion of assets tokenized. Any issuer who wants to tokenize the asset, whether it's a real world asset from, say, commercial real estate, debt, or an equity, or a bank's tokenization fund, they can just take our tech infrastructure, and in 48 hours, they can be up and running to tokenize any asset class. And it can actually integrate with any chains. So tokenization is nothing but converting any interest of any asset into a digital asset, digital token. So we are actually putting that asset's ownership interest on blockchain. And once you do that, you're basically owning that particular asset on chain. And that ownership interest, we divide it into multiple tokens, and we issue those tokens as a security. Those securities are actually compliant based on the jurisdiction where the asset class is. XRP is one of the best ecosystem in terms of the blockchain is concerned. The best example is like their native token standards. The compliant focused combination of compliant focused regulatory standards. XRP has got the best institutional ecosystem where you already have major banks actually working with you. and actually, it creates a major liquidity. The adoption level has increased quite a lot over the last 6 years, and I think we are at the point where most of the institutions have got into this space. So I think it's the future is extremely bright for tokenization of RWAs.
That's right. Tokenization of real-world assets. It is occurring, and it is occurring on the XRP ledger. Now, you heard him over the last, I think he said from 2017, they have tokenized about $5 billion worth of assets. So that's not a lot when you think about, all the years that have gone by. When tokenization has not been that popular. But guys, this is really going to ramp up as we see the years go on. So wanted to thank the Wrath of Kahneman for posting that. Of course, the regulatory environment in the United States is going to play a big role in this. Luckily, we have seen, shifts and movements all over the world when it comes to the regulation, the regulatory clarity surrounding tokenization, for example. But this, guys, coming from Anders, we are making progress slowly but surely. First, the Ethereum Foundation. Now this. Are we seeing the SEC slowly giving up the fight? So this was tweeted out by Paxos, the stablecoin firm. Paxos prevails in SEC investigation of BUSD stablecoin. On Tuesday, we received a formal termination notice from the SEC stating that it will not recommend enforcement action against Paxos Trust Company in the investigation of Binance USD. Here you can see the letter to that effect. I will I'll link this in the description of the video for you. It makes me laugh because the SEC, as Brett here says, the SEC keeps losing and losing time and time again. With the SEC's investigation into Paxos closed and BUSD cleared, it's a positive step towards legitimizing stablecoins as integral components of the digital economy. This coming from Before Investment here on Twitter. Limitless saying, now you should pursue your countersuit for the damages you suffered as a result of a very public SEC action. This is just another nail in their coffin. It feels like the nails have been continuously hammered in time and time again. Bank XRP posting this. SEC drops key stablecoin investigation in a win for the crypto industry. So also just commenting on this, Fortune Crypto did put out an article. The search for stability. So the New York-based Paxos first launched BUSD in a partnership with Binance back in 2019. Though the dollar-backed stablecoin never overtook its competitors Tether and USDC, it soon became one of the leaders in the budding sector thanks to its role in the Binance ecosystem. And as a result, the Binance BNB coin did rally in the last bull run, did perform very well, was probably my best trade in that bull run. The SEC's move against Paxos sent shockwaves through the crypto industry. Stablecoins will still fall in a regulatory gray zone, though, barring new legislation, but many argue that the absence of an expectation of profit, a key prong in the test to determine securities, separates them from many other crypto assets. So they've got a lot going for them, and, again, as I say, another loss for this loser here, big-time loser, Gary Gensler, but that is just one battle, unfortunately. There is a larger war here that we do have to win. The House has voted to override Biden's veto of the repeal of SAB 121. So that has failed to reach a 2/3 majority, unfortunately.
Vote. The yeas are 228. The nays are 184. 2/3 not being in the affirmative. The veto of the president is sustained and the joint resolution is rejected. The veto message and joint resolution are referred to the Committee on Financial Services. The clerk will notify the Senate of the action of the House.
Boo. As sad as this is, it's not like it wasn't expected. So do we know who voted against it? Yay will lose this election. I guess time will tell, guys. The election is coming up, and people who are, well, into cryptocurrency are likely not going to vote Democrat. If this is the kind of, response we're getting from Congress, the Digital Chamber here just posted a clip of Terry Ann Boring from a CNBC interview just talking about cryptocurrency with regards to this next election. Listen to this.
Ultimately, blockchains are what we will use to facilitate transactions in the future digital economy. And it's in our interest. It's in the United States economic interest that we are the country that leads in the development of building this financial infrastructure. And it's also becoming the will of the people that whoever is in the White House adopts a pro-crypto policy. So we've come a long way, and this is very much legitimizing the technology itself.
So the technology is becoming more legitimate as time goes on, but unfortunately the rules, the regulations still need to catch up to this. But this is big, guys. Eleanor Turret here posting this. Whoa, is this the SEC realizing it needs to relax SAB 121 requirements when it comes to banks and brokerages? So This was something else that came out. The SEC has opened a path for banks and brokerages to avoid reporting their customers' crypto holdings on their balance sheets. So that sounds, well, pretty favorable to the big banks, but companies must offset risk those assets pose in order to bypass controversial crypto accounting guidance that has become the target of Congress. So staff with the Security and Exchange Commission have begun to dole out guidance that certain arrangements may not require liability to be reported on the balance sheet under staff guidance issued 2 years ago, said an SEC source. Several large banks that have consulted with SEC staff starting in 2023 got the green light to bypass the balance sheet reporting by ensuring their customers' assets would be protected in the event of a bankruptcy or failure. The optics of this do not look good. Crypto Sensei here saying, imagine how great it would be to have an SEC leader who cared about the growth of the crypto market in the United States. It's so frustrating to constantly fight this battle. Ricky Crypto saying, finally SEC testing the crypto waters with some accounting rule flexibility. This is huge, says Rebel Plebe on Twitter. I'm not a fan, says Nick Young. This isn't scary at all. Nothing protects investors more than financial statements that omit key information. Only applies to banks and brokers. Yeah, exactly. Sounds like another way that they can leverage their power, another advantage that they have, I guess, in the in the world that they can use over us. Unfortunately, though, this is the way this current government has voted. So that is what's going on. Another one here from Eleanor Turret. This SEC has chosen to work with allies to give one-off approvals behind closed doors. What the SEC is now doing, according to the chair's own leak, is prudential regulation of banks. So this was originally tweeted out by Mud2Monarch here on Twitter. This may get drowned out by current events, but the SEC's SAB 121 out exemplifies all of our worst practices in the current SEC. Just some more opinions on this. Dave Weisberger here saying, wow, this administration justifies their blatant favoritism to the latest banks by lying they are protecting investors. And, at this point, who is believing that? How can they, in good faith, come and say, yeah, look, we're protecting investors by hiding information from them? In reality, they only protect those large firms by refusing to create a level playing field, which of course crushes innovators. Heath here saying, I wonder how much of the backdoor deal making has to do with the politically connected trying to get a head start before the election. If all their insider connections are at risk of going away in 6 months, better get the hay up while the sun is still shining. Corruption, no doubt about it. Even Caitlin Long is saying it right. Rules for thee, but not for me. Big banks get a pass. Welcome to the USSA. I haven't heard that one before. The USSA 2024. Selective enforcement of accounting rules against political enemies and in favor of political friends is not the way the U.S. system is supposed to work. Everyone in Congress who voted today to uphold Biden's veto of the SAB 121 bill voted for this corruption by voting for the SEC's selective enforcement of U.S. accounting rules in favor of the SEC's friends. So clearly, they're not putting one past the industry. So I wanted to thank Caitlin Long for posting that. Luckily, though, guys, this industry is still in its infancy. And I know, we're at a crucial point, especially in the United States. It could go either way. Hopefully, we do get a new administration in, and hopefully, we do see more sensible cryptocurrency rules and regulations moving forward. Smoke here, though, pointing this out, an in-depth explanation why blockchain companies will become the new most valuable companies in the world. So, if you think about it from the standpoint of we're very, very early on, if you guys are too young to remember, the internet was like this way back in the late 90s and early 2000s, where we didn't really have clear rules of the road and they had to be forged. And luckily at that time, the governments forged regulations that made sense and that allowed, not cryptocurrency, that allowed the internet to thrive in the United States and innovators to thrive as well. So here is confirmation, though, that blockchain adoption will be a great wealth creation event. Let's not forget, guys, the cryptocurrencies that hold value are going to be the ones ultimately over the long term where we're going to see our largest gains. And this is why at patreon.com/workingmoneychannel, I'm going to be giving so this is not for everybody, but I will eventually be giving my plan, what cryptocurrencies I'm going to sell, how much I'm going to sell of each cryptocurrency, and which cryptocurrencies I'm going to be keeping for the long term. So I do hold some utility coins. I do hold XRP. Obviously, that is going to be the biggest focus over there. But, this is all part of, a bigger strategy here. When blockchain adoption becomes that big wealth creation, how much XRP should I be keeping? Because you got to think to yourself, and I'm just going to throw up a quick example here. let's say you hold, I don't know, let's say you hold 100,000 XRP. I'm just going to make this example really easy. And let's say you spent, I don't know, 50 cents on each XRP. So you've put in $50,000. So your initial input is 50,000. You have 100,000 XRP. And just as an example, let's say XRP reaches its high during this bull run of $7. Okay, let's just say it's $7. It might be more beneficial to sell, let's say, I don't know, 80, 85%. Let's call it 85%. So 85,000 XRP today at $7, okay? Because then you'll have almost $600,000. Of course, you'll have to pay taxes on that, but you'll have almost $600,000 to play with in the interim, to live off of, to do what you want, pay off your house, buy grocery, whatever you need to do, maybe buy another investment property, I don't know. But you will at least have some money. And again, this is just an example off the top of my head. I'm going to be going into more detail on this at patreon.com/workingmoneychannel. And then to keep the 15%, so 15% would leave you 15,000 XRP. And now let's say that 15% gets to $10,000 per coin down the road. I'm not talking about tomorrow. I'm talking about 2030, maybe 2032, 2034, 2035, the year 2035. Now you have 150 million XRP. So it was actually more beneficial in this case scenario to sell out of a larger portion for a little bit of money in the interim, because now you can immediately do some things, and then to wait, guys, on a smaller portion of XRP, because over the long term, even that smaller portion will garner you way more money than just selling it all at the height of the bull run of, let's say, $7 per coin. So again, these strategies are going to differ for everybody, and I'm going to be posting mine at patreon.com/workingmoneychannel. Let's get back to this, though. Many people will make a lot of money. This is what Matthew Lee Merle says in this podcast. I want to play you guys a clip from this podcast. Listen to this.
I do want to give you my perspective. So in terms of 10 years from today, we will be far more progressed in the digitalization of all of our financial and commerce transactions, and the financial world will have changed very substantially, and most of the investments that you and your clients are making will be running on digital rails. In order to accomplish that, we will have had to put in place new infrastructure that is blockchain-based. And that's why the governments and the larger companies of the world are scrambling to get ahead in that regard. And a lot of disruptive companies are building, like Coinbase and Kraken and others already. So that's one thing. And so you saw that before with the internet. You know what that feels like between the years, say, 95 and 2005 and then 2010. You saw a dramatic shift in the way you communicated and shared information. And it's easy to forget that the Apple iPhone and iTunes and iPod, those things didn't even come about until like 2007, 8, 9, which was the end of the period I just mentioned. So you're going to live through that again. In terms of what does it mean for investments, because I think most of your audience help their clients invest, you're going to see the world's largest value creation event beginning to occur, because finance and commerce are much bigger than communications and content. So the companies that master this will become the future Microsofts, Apples, Googles. They'll become the world's most valuable companies. They may have names like JP Morgan and Visa, or they may displace JP Morgan and Visa. But either way, they'll be using this technology. And so if you have backed the companies that are making this technology available, you will be a beneficiary, and the value of those companies will go up very, very high, very, very rapidly. And it's already doing that. And I'll give you, let me just give you the examples right now. I mean, Coinbase is already worth 60 billion. Ethereum's worth 400 billion, but Ethereum, which builds software, it's a computer networking company. Its valuation today is only 1/10 of a Microsoft. It should be worth a lot more, because Microsoft is a closed operating system and technology company. Ethereum is an open technology company and operating system, so anyone can build on Ethereum. The other thing your audience is going to discover is that a lot of people are going to make a lot of money because the returns are going to be so high. This is my expectation, but again, it's based upon the internet. The investors that made the most money over the last 20 years did it because they invested in internet stocks. And that includes Warren Buffett. Half his portfolio and most of his alpha is driven by his Apple stock, despite that Charlie Munger didn't want him and he didn't want to invest in technology. Well, for all of your clients, the same is going to be true. Around the world, most of the alpha will come from innovation and technology.
So this is essentially a long-term play. Back to my example here, $150 million, could you imagine? If XRP does in fact go to $10,000 per coin by only holding 15% of that 100,000 XRP stack. Just one example. And again, I will be talking about what I'm going to be doing at patreon.com/workingmoneychannel. Guys, we got to be very, very careful with the decisions we make here. We don't want to mess this up. Part of my trading strategy is going to be selling a portion in the short term, but certainly going to be holding XRP and maybe some others in the long term. That's just my opinion, though. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.